What is going, everybody? It's your boy Tony here on the charts, continuing this series on Elliott Wave principles and how they can be applied to your trading. Continuing from the last video on impulse motive waves, we're going to be focusing on the zigzag corrections. Now, if you remember this presentation and setup from the previous video, we described how impulse motive waves move with sub-count parts of up to 5, and how basically in Elliott wave terms, there's a fractal nature about all of these moves. So looking at, for example, the wave 1 or the wave 3 and 5, there are smaller motive 5-wave impulses taking place in there. But the focus of this video is going to be on the zigzag corrections, and by corrections we mean these red breakdowns that we're going to be looking at, and this is that as shown within the letters for the corrections A, B and C. So for a zigzag correction, we're going to be focusing on the breakdown and the kind of the sub count to kind of confirm what form of correction this might be. Now, corrections are more difficult than impulses because they come in various combinations, which we will explore throughout this series. So if this is the very basis of our zigzag correction, we are labeling this 0, A, B and C. As the kind of title suggests, the breakdown of these is 5, 3, 5. The 5 is a part of the impulse, the motive, that's labeled in numbers, and then we've got a correction within the correction, so to speak, which would be labeled in letters A, B and C, and then the continuation of those 5 waves to the downside. Now here's some of the rules. It's possible for the wave B to retrace up to 0.5, 0.382 and 618 on the Fibonacci retracement, but 0.75 is the absolute. That's not to say that within a correction it can go further, but it's just not a zigzag. And the other forms that would qualify for that, we're going to be exploring in subsequent videos. And then finally, wave B can be any corrective structure. So that we're going to look at all the various forms that can take place, and just remember that this can be swapped out for some of those others. For this wave C, after a 5-wave impulse in one direction, a trend shift would be a 5-wave impulse in the other direction. So what this just means is the thing that we're going to be keen to be keeping an eye out for to know if there's been a trend reversal is if we can count 5 waves going in the other direction after this C is completed, then we know this is a reversal, because for example, and for reasons we'll show in real on the charts in real examples, there are things called like complex corrections, and this could continue to the downside even further. So how do you know it's fully turned around? The wave C minimum length is parity with wave A, and potential extensions include 1.272, 1.414 and 1.618. Anything over could be valid, but just decreases in likelihood. And finally, wave A and C can either be an impulse or a diagonal, and diagonals we will expand on in a separate video soon. And finally, the general kind of nature of zigzag corrections are just more impulsive, whereas flat corrections, which we'll look at, are more consolidating. So let's just look at some quick examples out in the wild. Just moving over to the Bitcoin daily chart, I give kind of weekly updates of kind of my trade predictions, including an Elliott Wave count, which I'm going to update this week. But nonetheless, some of the basic premises of what we're looking at in terms of corrections are definitely valid for this. But what you can just kind of see of my overall setup, you can just see how, for example, that 1, 2, so that's suggesting my larger count, and then my smaller time frame count, and so well on both fronts. But what we're going to focus on are the letters in blue, because these are corrections, and at least in these examples appear to be simpler zigzags in how they're being presented. So here's a very simple example. We've got the A, the kind of the drop after the completion of that impulse motive wave, the kind of ever so slight pullback to form the wave B, and then the continuation of the wave C. Now, how can we confirm if this is a zigzag? You know, hindsight comes with 20/20 vision, but the things we would have been looking out for is, you can see right there how the pullback hits the white line, 50%. That's textbook, just like we were discussing in the example slides. And in terms of a Fibonacci trend extension, if we were to go between these, I mean, while there's no kind of super clean reaction, there's obviously some sort of acknowledgement and reaction to the 1.618. So that's a really good and clear ABC, which I find, you know, no rule or reason for me, just seems to be clearer on the daily time frames. Because if I was to go onto the weekly, or you know, if anybody's ever been trying to look at Bitcoin on those larger time frames, you know, for example, we would have been questioning and assuming that, well, and probably even hoping that this was an ABC that was finishing previously, but it continued further, and this is precisely what we're going to be looking at in future videos. Is you know, what are the characteristics that you should be keeping an eye out for complex corrections and how they kind of return. So this is a different form of notation. You can see this is a, you know, a WXY, which you might have heard previously. But what I just recommend coming out from this is, you know, look back at the charts, look back on daily time frames, look at examples like this pullback and zigzag to the downside, and see if you can find that kind of sub count structure. In the next video, we're going to be looking at flat corrections to kind of continue this kind of series of the various forms that corrections can take in. But we look forward to you joining, and happy trading in the meantime. Ciao.